welcome to The Mint. I'm Cecilia Kamputa and we're coming to you live from Mars 18 Studios in Harare, Zimbabwe. Now, ahead on our show, the Consumer Protection Commission of Zimbabwe, CPC, has issued a public alert regarding the recall of Mercedes Benz GLE 167 model following concerns raised by South African authorities over a potentially dangerous fault in the vehicle's high-voltage starter alternator system. And President Emmerson Mnangagwa yesterday commissioned a 56,000-ton smart gray storage facility in Kwekwe, which will help the country save over $30 million in handling inadequacy-related losses while pivoting the country towards attainment of Vision 2030. And Pro Plastics Limited, one of Zimbabwe's foremost plastic product manufacturers, has kicked off the year with a solid performance, posting a 3% rise in revenue for the first quarter of 2025. And the Eagle Real Estate Investment Trust, managed by Fidelity Life Asset Management, is set to list on the Victoria Falls Stock Exchange on May 16 by introduction, with public trading beginning May 18. And South Africa's second biggest asset manager plans to grow its market share in East Africa to take advantage of the continent's fastest growing region. And since the middle of February, the city of Johannesburg has run a campaign to enforce trading bylaws, verifying whether traders are properly registered and trading in designated areas. And the Global Manufacturing Purchasing Managers Index, PMI, declined to 49.1% in April, 0.5 percentage points lower than that in March, according to the data released by the China Federation of Logistics and Purchasing on Tuesday. And global economists have called for concerted efforts to safeguard an open and multilateral international trade system to effectively deal with protectionism as the U.S. erratic tariff policy is jeopardizing global economic growth. Now, don't go anywhere. The Mint will be right back. Welcome back to The Mint. I'm Cecilia Kamputa and we're coming to you live from Mars 18 Studios in Harare, Zimbabwe. Now we take a look at our stories in detail. The Consumer Protection Commission of Zimbabwe, CPC, has issued a public alert regarding the recall of the Mercedes Benz GLE 167 model following concerns raised by South African authorities over a potentially dangerous fault in the vehicle's high-voltage starter alternator system. According to the CPC, this comes after an alert by the Common Market for Eastern and Southern Africa Commerce Competition Commission, CCC, on the recall of Mercedes-Benz model GLE 167 vehicles by Mercedes-Benz South Africa. According to the CPC, a statement from the National Consumer Commission of South Africa, NCC, the recall was due to a high-voltage starter alternator processor load. We are now joined by Eben Mabunda, who is in the Harare CBD for insights on the subject. Eben, good day. Can you tell us more?
Good afternoon, Cecilia. This is a development that is coming after the issuance of a statement by the Consumer Protection Commission of Zimbabwe against, of course, the GLE 167 model, of course, that being a Mercedes. This after earlier statements were issued by the National Consumer Commission of South Africa, as well as the Commerce Competition Commission against this particular model, of course speaking to the need for recalls of this particular model. Now, for a broader context, South Africa is Africa's most industrialized economy, and so it also has an advanced vehicle assembly industry, I would put it, where you've got your Toyota, your Audi, your Mercedes, your BMW. And so this serves as a hub for the assembly of Mercedes vehicles within the Southern African bloc, and it's of course a distributorship that spreads into several countries. Now it's been noted that for GLE models that were manufactured between 2022 and 2025, there were some faulty models that were produced in those vehicle assembly plants, and so after several incidents of note, this particular decision was made from South Africa earlier in the month of April. And so right up to this point, several countries within the bloc have also identified or come across cases of a similar nature, hence the recalls that we're seeing that are being made at this particular point. So initially it was South Africa that made this alarming statement, COMESA also taking it up, and now we've seen Zimbabwe taking a similar call for that particular recall to be made where domestically available vehicles are concerned.
Now, Eben, what is the extent of the damage?
Well, what we do know at this point is that 54 vehicles have been identified between South Africa, Lesotho, as well as Swaziland. But let me hasten to indicate that this is an alarm that has come from South Africa. But you find that this is not an alarm that's been raised elsewhere in the world. But it seems that this is a case that is unique to vehicles that have been assembled from South Africa, from the Mercedes assembly points here in Southern Africa. So I think this would pretty much highlight that extent of the damage. I think we're speaking of scores of vehicles. At this particular point, we do not know the exact extent of this particular damage, but what we do know, according to the statements that have been issued, is that 54 vehicles have been identified, and now that Zimbabwe has also issued a similar statement, I think there will be inspections that are to be expected from Zimbabwe. And of course, the statement issued by the CPC here in Zimbabwe is to alert drivers of this particular model here in Zimbabwe to visit their respective mechanics, to visit their respective dealerships to make sure that their vehicles are on point. The challenge here of note is the fact that there is an overload where the starter is concerned, and according to that particular statement, this could result in some kind of an accident or some kind of a fault, which drivers of the GLE 167 model need to be alert to. And so the call goes to all the drivers of the GLE to visit their mechanic, visit, of course, their dealership to ensure that their models are on point to avoid possible accidents. And should they not be sure upon checking here in Zimbabwe, of course, Mercedes has opened the call to all drivers in South Africa and within the region that they can have their vehicles inspected at any Mercedes accredited dealership for free to avoid loss of life, to avoid any potential accidents and the harm that could manifest as a result.
Now, thank you, Eben, for that. Moving on, President Emmerson Mnangagwa yesterday commissioned a 56,000-ton smart grain storage facility in Kwekwe, which will help the country save over $30 million in handling inadequacy-related losses while pivoting the country towards the attainment of Vision 2030. In his address at the commissioning held at Kwekwe Grain Marketing Board silos, the president said the establishment of such facilities is part of government's national-wide modernization and integration of cutting-edge artificial intelligence and other technologies to revolutionize the country's grain storage facilities. To guarantee requisite storage, 14 additional state-of-the-art silo depots were established across all rural provinces.
This 56,000-ton smart grain storage facility with 7 state-of-the-art silos is yet another testament of the transformation that continues to unfold in our country's agriculture sector as we modernize national food systems. Undoubtedly, the numerous investments made under the Second Republic have put Zimbabwe firmly on course to becoming a food secure, empowered, and prosperous upper middle income economy.
Now turning to climate change, President Mnangagwa said mitigatory measures need to continuously be put in place. Government has moved to increase the strategic grain reserves from the current 750,000 to 1.5 million tons. The president said over the years, the country has witnessed increased production and productivity in cereals, horticulture, oilseed crops, as well as other industrial crops, along with improved national livestock numbers.
This particular infrastructure here, which we are unveiling today, is timely. More so that the negative impacts of climate change have heightened the need for robust and holistic food security initiatives, as well as sustainable food supply and nutrition measures. Cognizant of this fact, my government in 2020 launched the Agriculture, Food Systems and Rural Transformation Strategy towards guaranteeing food and nutrition security. The improvement of livelihoods and contribution to overall economic development is also at the core of this strategy. Over the years, we have witnessed increased production and productivity in cereals, horticulture, oil seeds crops, as well as other industrial crops, along with improved national livestock numbers in our country.
Now, Zimbabwe's dreams of feeding itself and beyond continues to bump against a stark reality year after year and the staggering losses in old and open storage facilities. Today, we ask, can this latest innovation finally bridge the gap between aspiration and achievement? Our correspondent Wilson Kakurira compiled the following report.
Imagine a technology so smart that it can test the air inside a grain silo, knowing exactly when to protect its precious contents. The Grain Marketing Board's Kwekwe Depot, the first of its kind in Zimbabwe, is now utilizing artificial intelligence for food security. And ushering in this new era of grain preservation is engineer Andrew Mupariwa.
The facility is highly automated with modern technology, where we are saying everything is controlled from one central unit. The moment a truck moves in, it's monitored from there, from moving in, from the weigh bridge, offloading and moving out. Operations of the silos, it's all automated. We are going to be having conveyors which can monitor the volume of grain which is being moved in and out of the silos.
The impact of these storage losses has been felt most acutely by the farmers who used to be turned away for bringing grain with moisture content more than 12.5%.
Inini semurimi tiri kufara zvikuru nechirongwa chatakaitirwa ichi nekuti taiti tikaunza chibage kuGMB dzimwe nguva taitodzokera nacho chinzi chibage chenyu chinyoro, saka zvinozokuomerawo semurimi waauya nacho wodzokera nacho, but pari zvino nepurogiramu yavakatipa takukwanisa kuti tikauya nacho chibage chedu chinongotorwa nenguva, tatichitambura tikange tauya nezvirimwa zvedu pamwe pachona zvinenge zvauya in bulk saka tachizoshaya kuti chibage choenda kupi nenyaya kuti chinenge chakawanda. Asi tiri kufara nepurogiramu yatakaunzirwa nehurumende, taakungoendesa masairo ka1 tichingopinda zvisina kana kutambura, inguva diki diki chibage chako chinenge chatoenda.
For Mavis Vurundia, a local farmer in Kwekwe, the introduction of these cutting-edge silos brings a sense of much-needed financial relief for farmers.
Kana takuda kunokuwa takanga tisina masagi. Saka mari dzacho dzaitinetsa dzekuatsvaga apa takungoendesa chibage chedu chisiri mumasagi. Saka hatichisina stress yekutsvaga mari yekuti tiendese chibage chiri mumasagi. Saka tazvifarira. Tinongofarira nyika yedu kuti iri kufambira mberi neteknology haisi kusarira mumashure.
Zimbabwe has been losing grain worth over 32 million United States dollars every year due to outdated, insufficient storage facilities. Rains, manual handling, and pests are big factors to these losses. Engineer Mpariwa said a strong strategic grain reserve is not just a goal, but a necessity.
So we are saying there's no more need to have people roaming around. Everything is controlled from one CPU. You can monitor, even if there's a fault that happens, it will send a signal. And the signal you can see on the monitoring unit.
For a nation striving for food security, Zimbabwe requires a substantial 2.2 million tons of grain annually. The coming online of all the remaining new silos is expected to add a total of 780,000 tons to the current capacity of 650,000 tons by 2026.
Now, time for us to take a breather. After the break, Pro Plastics Limited has kicked off the year with a solid performance, posting a 3% rise in revenue for the first quarter of 2025. Now, don't go anywhere. The Mint will be right back.
Welcome back, gospel music lovers, to another season of My Ultimate Gospel 10. Your ultimate destination for soul-stirring melodies and inspirational stories.
And prepare me for a good day.
And God is faithful because He's holy.
Like, wow, this is beautiful.
Each week, they'll be revealing their top 10 gospel songs. Meet Miss Becky K, the dynamic and passionate new presenter for Season 3.
If you are ready, let's get into My Ultimate Gospel 10.
Premiering soon, only on ZTN Prime. Stay tuned and let the music uplift your soul.
We are a special day today here in Harare. It's the inaugural show of the Phoenix podcast.
The story of Africa is really a story about rising from the ashes.
I'm privileged to be sitting in Dubai, and I'm here today in this city of Hoi An in Vietnam. And he's the Amazon #1 seller of a new book called Take Charge. She's one of the most famous celebrity chefs in Vietnam.
You just have to speak it into the universe. When you say something, the universe listens. God listens.
But more importantly, we're talking about having the ability to believe in yourself. Because if we want to make our children, it's not what we do for them that will make them, but it's what we don't do for them that makes them. If you want to be a global player, listen to the future. You can't become the pearl without the irritation.
You have to go through that pressure. It's what's going to make you shine.
Those things that I fell down actually helped me appreciate how to get up again. And every time I got up, I was stronger. Because there's nothing as powerful as an idea whose time has come.
Now, welcome back to The Mint. I'm Cecilia Kamputa, and we're coming to you live from ZTN Studios in Harare, Zimbabwe. Now, Pro Plastics Limited, one of Zimbabwe's foremost plastic product manufacturers, has kicked off the year with a solid performance, posting a 3% rise in revenue for the first quarter of 2025. The company's earnings reached $4.263 million, up from $4.123 million in the same period last year. The increase, though modest, points to a company that is not only holding its ground, but steadily advancing in a tough economic climate. Industry analysts describe the growth as a sign of resilience, with the company demonstrating strong strategic planning and adaptability despite headwinds such as currency instability and inflation pressures. According to Tafaram Tutu, head of research at Morgan & Co., the revenue uptick was largely supported by sustained activity in residential development projects, which continue to drive demand for essential construction materials like piping and water reticulation products.
That marginal growth, it only stands to reason that the key driving factor has been the private sector. And when you look into the private sector, most of that growth is coming from residential developments. We've seen a lot of people converting large tracts of land, especially in the northern suburbs of Harare, and even farms in farms that are in the peripheries of other smaller towns in the country. We've seen those pieces of land being converted into cluster development, and with that comes infrastructure development for your waterworks, sewer, pipe, etc., etc. And I think that has been the key driving factor to that marginal growth in Pro Plastics in the first quarter.
Looking to the months ahead, Pro Plastics is optimistic. Mtutu notes that improved electricity generation, particularly from Kariba South, Wanke Units 7 and 8, and new independent power producers, is expected to stabilize production output, reduce operational costs, and further boost efficiency.
I don't think there has been a marginal material change in their production costs. And I think that going forward, it could actually improve when you're looking at the electricity supply trend in Zimbabwe, where we're expecting more from Kariba post La Nina, and also improved supply from Wanke power stations, and also the small but growing improvement in supply from IPPs.
As the manufacturing sector continues to adjust to Zimbabwe's shifting economic landscape, Pro Plastics appears well poised to capitalize on new market opportunities and to keep growing one quarter at a time. And moving on, the Eagle Real Estate Investment Trust, managed by Fidelity Life Asset Management, is set to list on the Victoria Falls Stock Exchange on May 16 by introduction, with public trading beginning May 18. The fund focuses on investing in underserviced communities, with Phase 1 of Mazoe Walk now complete and Eagle Heights in Victoria Falls taking shape. Both projects are expected to create jobs and boost local economies, and the listing marks a major milestone, securing REIT tax status while maintaining prescribed asset status, making it a tax-efficient option for investors. Now, Eagle REIT thanked early investors, including Zimmer Holdings and Fidelity Life Assurance, for their support, with a portfolio spanning medical, housing, retail, and tourism sectors. The fund offers diversified growth opportunities while contributing to community development. Moving on to the region, South Africa's second biggest asset manager plans to grow its market share in East Africa, to take advantage of the continent's fastest growing region. Stanlib Asset Management intends to scale up its Kenya and Uganda units, started in the past 2 years, to become real competitors, said Chief Executive Officer Derek Msibi in an interview. Musibi, who also oversees the asset management businesses of Stanley's parent Standard Bank Group in several African nations, including Nigeria and Ghana, said in Kenya, if one does not get into the top 6 asset managers, they are going to struggle. The Kenyan unit, started in July, is currently in about 13th position. And the East African nations' top 6 fund managers control 97% of the market and had almost 1.7 trillion shillings in assets under management at the end of December, according to data from the country's pension regulator. And the African Development Bank estimates East Africa will grow 5.3% this year, compared with 4.6% for West Africa, 3.9% for Central and North Africa, and 3% for Southern Africa. Now, this expansion will help Standard diversify its income streams at a time when asset managers' margins are being squeezed in South Africa because of rising costs. An oversaturated market and stagnant economic growth, Stanley's push into East Africa aligns with Standard Bank as it seeks to ward off intensifying competition and tap African companies growing in the region. Now, the continent's largest lender by market value, FirstRand, is looking at establishing itself in the East, including in Kenya, and Nedbank Group plans to set up an investment banking product that will allow it to tap into the region's renewable energy and infrastructure finance needs. And since the middle of February, the city of Johannesburg has run a campaign to enforce trading bylaws, verifying whether the traders are properly registered and trading in designated areas. But some traders say they were punished even though they had permits and were trading in the same places they had been for years. They were told to shut down, and some had their stock confiscated. Dimakaso Khapola, who sells pap, had her store closed down at the end of February, even though she had a permit and was paying the city 120 rand every year. She was told the area was not designated for trading, even though she had been there for years. After the Socio-Economic Rights Institute, SERI, sent the city a letter of demand on 24 February, Khapola and others were able to return. But in some areas, the harassment continues. There are more than 3,000 registered traders on the streets of Johannesburg. Xolela Ntobe, who has been selling vegetables on the streets since 2006, went through the same ordeal. Some of her neighbors had their stock confiscated without receiving impoundment receipts, she said. In 2013, Ntobe was among dozens of lawful traders forced by the city of Johannesburg to close their stores for several months. The Constitutional Court ruled in December 2013 that the traders should be allowed to continue their business, ordering the city to allow them to return. Now, time for us to take a break. After the break, we continue with more of our stories in the region and beyond. Welcome back to The Mint. I'm Cecilia Kamputa, and we're coming to you live from Mazetten Studios in Harare, Zimbabwe. Now, the Global Manufacturing Purchasing Managers Index, PMI, declined to 49.1% in April, 0.5 percentage points lower than that in March, according to data released by the China Federation of Logistics and Purchasing on Tuesday. The decline marks 2 straight months below the 50% threshold that separates expansion from contraction, reflecting a further decline in global industrial activity, the Federation said. Analysts say the sustained weakness in manufacturing underscores increasing global economic strain and heightened trade tensions, particularly new U.S. tariff hikes, are seen as a key factor exacerbating downside risks. Now, that is all we had for you in today's episode of The Mint. Good afternoon and pleasant viewing.